Hood just face planted almost 8%. The whole market is acting like it heard a loud noise upstairs, and the chart is currently screaming, I want my mommy. Not financial advice. This is financial theater, and Hood is tonight's headliner. All right, welcome back to Fintech Spy, where we stare at charts until they start making eye contact back. This episode is Hood, and the vibe this week is macro is pulling back, gold and crypto are doing that awkward, I'm fine smile. And apparently, software stocks decided to speed run their worst day of the year like it was a competitive esport. So, what does that mean for Hood? It means we're not just watching one ticker, we're watching a ticker in a room where everyone simultaneously remembered they have bills. We'll hit the usual cadence: what analysts aren't doing, what news did happen, what the weekly and daily chart are implying, and then we'll end with the options chain, where retail imagination goes to bench press reality. And again, because somebody will ask, not financial advice. This is parody. If you buy a stock because a cartoon spy sounded confident, that's not a strategy, that's performance art. Let's start with analysts, because I know you love when people with price targets pretend they discovered gravity. There are no upgrades. None. Zero. The analyst community saw Hood sliding and went, you know what? I'm going to sit this one out and protect my aura. Which is kind of hilarious because when a stock is ripping, analysts show up like they got invited to the party early. But when it's pulling back into a key area, suddenly they're busy and focused on long-term fundamentals and walking their dog and recalculating their models. Sure, love that for them. So, no analyst fireworks, meaning sentiment isn't getting a convenient rescue narrative. This is just Hood and the market, alone in a room with the lights buzzing. Now the news. And this week, it's a very specific kind of news, which is one executive made a move, and the company itself is basically quiet because earnings are coming up next week on Tuesday. First, the chief brokerage officer sold 52540 RSUs with a market value around $4.7 million. Now, before anyone goes full tinfoil and starts filming a conspiracy documentary in their kitchen, let's say it plainly. Insider sales happen for a lot of reasons: taxes, diversification, I would like to own a house, or I promised my spouse we'd stop living like an options gremlin. But optics-wise, while the chart is sliding and the market is fragile, that's the kind of headline that makes traders do the side eye. Not necessarily because it's evil, just because it doesn't scream maximum confidence heading into earnings. Second, it's quiet on the company front because earnings is next week, which means we're in that magical pre-earnings phase where nobody says anything, and the chart fills the silence with interpretive dance. So the setup is basically macro is risk off, analysts are absent, insiders are doing insider things, and earnings is looming like a pop quiz you didn't study for. Perfect. Great. Love that. Let's zoom out. Weekly chart time. This is where we stop pretending we're day traders and start pretending we're wise. Hood is approaching the 77.10 fib level, and that matters because fib levels are basically the market's version of I swear I won't text them unless. Momentum-wise, the weekly MACD is still drifting down toward a more neutral posture. I'm not reading indicator numbers because we're not doing chemistry lab results here, but directionally, it's still in that gravity is winning phase. And the stock RSI on the weekly is way oversold. Like, not a little oversold, not kind of stretched, but sir, the chart is lying on the floor oversold. Now here's the part where bulls always get excited. Oversold weekly conditions can mean a bounce is near, but it can also mean the stock is simply taking the stairs down, one dramatic step at a time, while everyone yells, bounce, like that's a spell. The weekly 50 EMA is sitting around the mid-90s area, and the chart has almost bounced off it, which is a very polite way of saying it tried. The bigger storyline is this. The weekly looks like it could be setting up for a bounce off either that fib region or deeper moving average support, specifically the 100 EMA area if things get extra spicy. So if you're a bull, your argument is, we're oversold on the weekly, we're hitting a level, the rubber band is stretched, and earnings could be the catalyst. And if you're a bear, your argument is, have you considered gravity? Both are valid emotions. Now daily chart. This is where the weekly slow motion drama turns into a sprint. The daily is accelerating downward. That's not a poetic metaphor. That's literally the vibe. Sellers aren't just selling, they're gaining confidence while doing it. Momentum is getting stretched, and yes, the daily MACD is getting closer to what could become a reversal setup. But I'm going to say this carefully. Getting closer is not the same as it's happening. Traders love to front-run reversals the way people love to clap before the plane lands. Like, buddy, the tires aren't even touching the runway yet. The stock RSI on the daily is also oversold. And at this point, it's oversold in the way your phone is oversold when it hits 1% battery and you're still trying to watch YouTube in HD. Now, the really spicy technical headline. The 50 EMA and the 100 EMA have crossed on the daily. And that's one of those things where people either treat it like a prophecy or treat it like a lagging confirmation that the damage already happened. I treat it like the chart changing its relationship status to it's complicated. Also worth noting, the daily has the 200 EMA sitting beneath as a longer-term line in the sand kind of area. One of those levels where bulls start bargaining with the universe. Okay, fine, I won't ask for a squeeze. Just let it hold the long-term trend. So, daily chart summary. It's moving fast, it's stretched, it's emotionally unstable, and it's approaching spots where a bounce could happen, but the tape still looks like it wants to test how patient bulls really are. Now let's talk options, because nothing says healthy market like retail trying to predict the future using open interest. We've got Feb's 6th expiration, and the expected move is about plus or minus 5.47. Translation. Options are pricing in a decent swing, but not meteor strike levels. More like earnings week jitters with a side of chaos. On the put side, the largest open interest is at $60 with about 9.4 thousand contracts, followed by $80 with 6.4 thousand. That's a pretty funny pairing because it tells you two things at once. There are traders way down at 60 preparing for the worst like they're stocking canned food. And there are traders at 80 basically saying, if we even sniff that area, I want to be early to the meltdown. On the call side, the biggest piles are $95 with 10.5 thousand contracts and $90 with 10.2 thousand, which is objectively hilarious because the options market is like, yes, the chart is sliding. Yes, macro is pulling back. Yes, software had the worst day of the year. Anyway, I would like Hood at 95. That's the options market in one sentence. Reality is optional. So what's the option story here? It's not a clean, symmetrical setup. It's a nervous setup. Puts show real downside concern, especially that $60 magnet lurking in the distance like a horror movie sequel. Call show traders still want a rebound narrative into earnings, clustering around 90 to 95, like that's the hope zone. And with an expected move of plus or minus 5.7, the market is basically saying, we're willing to move. We're just not sure if it's a bounce or a bruise. So let me ask you, is this hood pullback a weekly oversold bounce setup? Or is it just the market reminding everyone that support is sometimes a suggestion? And also, be honest, when you see those call stacks at 90 to 95, do you think that's conviction or coping? Drop your take in the comments. If you enjoy market chaos explained with sarcasm and mild emotional damage, hit like, subscribe, and share this with a friend who keeps buying dips like they're collectibles. And if you're new here, welcome to Fintech Spy, where the only thing we guarantee is entertainment, not financial advice. That's it for Hood. Analysts are silent, insiders are cashing in, macro is pulling back, and the chart is yelling, I want my mommy, while earnings waits around the corner like a jump scare. Trade safe, stay skeptical, and remember, if your plan relies on it has to bounce, your plan is actually a prayer, not financial advice. See you in the next one.